morning, traders. My name is Timothy Hellberg. I'm a professional trader since 12 years back, and today I'm bringing you a market report in collaboration with IMGFX, the People's Broker, for week number 15 of 2022. So let's jump right into it. Before we get going, just let me remind you that this is not a recommendation to buy or sell anything. It's just a market run through from my point of view in order to shed some light on the upcoming events and what we are seeing as a general theme in the markets to potentially educate and help you guys trade the markets more profitably. But in the end, you got to do your own research, your own risk assessments, etc., etc. So the agenda for today will be that we will run through the economical calendar, what events we are looking for in the upcoming week. We'll run through quickly market sentiment, current and potential shifts to look for. We'll look through last week's calls, what worked and what didn't. Basically, there are two sides to the same coin last week, and I'll explain more what I mean with that. We'll look at Bitcoin, where pullbacks are in, but are the bulls actually gone? We'll look at gold, where the consolidation is continuing. And we'll take a look at the US dollar, which could be the safe haven that lost its shine, or has it? We'll also take a look at EURCAD, which is just a strict normal play where the short trade is on. And we'll end off by talking a little bit about risk and why we should watch the correlations. And why am I saying that? Well, because we are at the moment in a bit of a standstill in the markets where we're seeing some waiting for some larger macro trends to develop, and while waiting for that, it's not as easy to find good actionable trade setups. So that's why this report is actually having a little bit less of actual trade setups. So if we start out by looking at the economical calendar for next week, we'll go to forexfactory.com and use theirs just for the sake of it. We have a pretty big one already today, Sunday, where we're seeing the first round of French presidential elections. Now, this is important. Why? Well, because you're basically seeing two major candidates that are going up against each other, where one of them, Marine Le Pen, is very anti-EU, you could say. So any news about, and it's going to be a tight one by the looks of it, so any news about Le Pen actually closing the gap and gaining ground could be very negative for risk, because both as she does not like the EU, she's very, sort of France first, so she wants less EU, she doesn't like the euro, she doesn't like the the correlated response that the EU has taken against Russia in the Russia-Ukraine war. So all of that is extremely important for the developments going forward. So any kind of news that Le Pen is closing in on gaining that presidency could really throw a wrench into the euro and overall risk sentiment. So keep an eye out on that. It's just the first rounds, but it's something to watch. Then Monday we don't have anything really to watch. Tuesday we have CPI and core CPI from the United States, which is very important because it's a good inflationary reading. So this is definitely something that you have to watch because inflation is coming back on the docket. It's something that we are focusing more and more on again as the market is getting a little bit complacent with the Russia-Ukraine war. We are starting to close in and focus more and more on inflation once again, so there, especially in the United States. So for that reason, you need to watch this data release, as it's a good inflationary indicator. Wednesday, we have the RBNC, which is basically interest rate for the New Zealand dollar, which is very important to watch. We just had last week for the Australian dollar that took the market by some surprise. It shouldn't have, but it did, and for that reason you have, the Australian dollar and the New Zealand dollar are sort of brothers, they go hand in hand. So this will be a big one to watch, and it's just generally important right now to watch this inflationary race that we are seeing around the world. Which countries are raising rates, which countries are not, which ones are getting left behind, etc. So definitely something worth to keep an eye out for, especially if you are in in Australian or Kiwi trades. CPI for the pound, good inflationary reading, watch that. United States PPI, once again, good inflation reading. And CAD, we have the rate statement, also, as I just mentioned, the same reasons you need to watch that. Employment for the Australian dollar on Thursday. This is actually a news that sometimes deviates a lot from the expected data, so it can generate some very good momentum trades. I've made a lot of money with this in the past years. So if you're into that type of trading where you like to trade news releases and try to jump in on the momentum that this discrepancy between the actual data release and the forecast, this is definitely a news release to watch. And then we have the big guns for the week. We have the interest rate decision from Europe, where Europe is kind of lagging behind the United States at this point in time, and I personally don't see that continuing. We have inflation going rampant in many Euro countries. We have, for example, Spain, I think it was over 8% already. So the ECB will have to do something, and it's just a matter of time before they can jump back on the bandwagon together with the United States. So for that reason, and as I already mentioned for the other economies, need to keep an eye out for this. Retail sales, not that important for the United States. My opinion is that retail sales should not be red flagged on a economic calendar because it's not high impact news, in my opinion. So let's jump into market sentiment, and as you know, when we do that, we generally like to look at the VIX. So the VIX is volatility index. Let's look at this here. We had a pop back up last week, seeing some increased volatility, and I had a small pullback from that. I would not be surprised to see the VIX being a little bit more elevated in the upcoming week. I wouldn't be surprised if we see this moving a little bit higher again, breaking above the moving averages and selling more up towards the 25-30 levels, because we are going into earnings seasons where the United States' largest companies are showing their earnings for the last quarter, and for that reason you will see a pickup in volatility in equity markets, and naturally that will also affect the risk sentiment for the equity markets, which also is in some sense the general risk sentiment for financial markets. You will also see these big rate decisions from large economies like for example Europe. So definitely we could see a pickup in volatility in the upcoming week, and that's important to keep an eye out on, depending on your position sizing and just staying on top of your trades and on top of your risk. The sentiment is kind of and I'll talk more about this when we go into the last week's calls also, but we are seeing a shift right now. Not a shift, but we are seeing a inconsistency in the markets trying to decide on what it feels like at the moment. So market sentiment best described at the moment as a little bit blurry, and earning seasons and the start of the new quarter, all of that will provide some more guidance. It's a very crucial week for the upcoming quarter in terms of market sentiment. So a little bit blurry at this point in time. If we take a look at last week's calls, we had calls for, let's take a look at Bitcoin first. So we were looking for as I've always talked about, I'm looking for the larger bull run to start in Bitcoin. We had this lower time frame chart pattern forming, but we broke down out of that, and I was warning about that in last week's call, that I would not be surprised if we started seeing some pullbacks in Bitcoin before we move higher, and we got exactly that. So I'm a little bit flip-floppy right now on Bitcoin. I think you can do whatever. I think it's a lower time frame trade. On the higher time frame, this structure still works. Longs against this support still works, but on the lower time frames, it's still the same as last week, where you could just play the short-term trades. We had in either direction. We had gold last week that just kept on moving in the same consolidation not convincing in any sense at all. We had euro dollar where we were talking about the potential for a new bull run, and we got a break just above the current consolidation, only to move back down and break down back into it. So that's a little bit on the topic that I've been talking about so far, where we are seeing some inconsistency, some difficulty, some murky sentiment where we can't really decide on the direction at this point in time. And it's like that sometimes, and you have to go back into capital preservation rather than high beta returns. So we also looked at pound yen as a good hedge to the pound. Pound is generally strong in April, and we saw a strong pound heading into April last week. So the hedge in pound yen, looking for shorts in pound yen, does not really work yet. We are up against the highs, so if you are looking for a pound short to hedge long pound seasonal exposure, this could be a good hedge to that. But the overall sentiment for the pound from a seasonal perspective is higher in April, so could be interesting. And those were the major calls that we did last week. So looking at this week, if we go back to Bitcoin, as I mentioned, it's pretty much the same thing. We are looking for lower time frame trades. I don't mind trading Bitcoin to the downside. I don't mind trading Bitcoin to the upside. At this point in time, I don't have the momentum trigger that we are starting this larger move to the upside, especially not as we move back into this pattern right here. So it's a lower time frame play, and I don't really have a bias on it at this point in time unless we break higher or break significantly lower. Next up, gold. I've said it for I don't know how many weeks now. I still like gold longer. I still like gold higher. We had a decent ending candle for last week, so I would not be completely off to looking for this consolidation to break to the upside. If we do, I want to be long gold again against the lows, against mainly 1915, but also the larger support down here. But my stops would mainly be against 1915 if we would break above here. As I've mentioned before, I still like gold higher. There's a good case for gold to go higher in this new high inflation markets that we're seeing, where central banks are trying to catch up, and things are just looking very bad from that point of view, because we are still having supply chain issues. The conflict, the war in Ukraine is not making anything better. The way Russia is behaving is not making it any better. The sanctions on Russia is not making it any better. So the world economy is just in a really tricky spot after the COVID pandemic, and you will see the more classical safe havens, like for example gold, do well in my opinion. So on that topic, let's look at the dollar index, because the US dollar used to be a big safe haven, and it lost that shine for a bit. So question is that shine still gone? No, I would say that the US dollar is actually making a comeback as a very good safe haven, because we were seeing talks for many years, last few years, about Bitcoin becoming the new reserve currency of the world. You see all these headlines about about Russia using crypto in order to work around, all the sanctions on Russia would make the US dollar lose its reserve currency value. But we are not there, and we are heading into a very new sort of environment in terms of macroeconomics, where, as I just said, the world economy is not in a good place. So I would watch for equity markets to start getting hit by this rampant inflation. I would start looking for equity markets to take a hit on the supply chain issues growing larger and larger. We are seeing inflation going nuts, with wages not really catching up. So everything is getting more expensive. People are earning less money. It's just a really bad situation for the world economy. And I'm not saying this as a doomsday scenario, I'm just stating the obvious on what we're seeing in the markets. And from that point of view, you will see large-scale financial institutions. We are talking everything from big banks to very large corporations to funds, large pension funds, hedge funds, big family offices. All of this, we will see a limit in risk exposure. And when you see that all of these, not all of these, but the majority of these big actors on the financial markets, the majority of them, they are using the US dollars as their house currency. And by house currency, I mean it's the currency that they have their corporate accounts in, or their general accounts in, etc. So when you're starting to move back money from, if you don't want to keep your money in, for example, equities around the world, because the equity markets will eventually start turning back lower, you don't want to keep that risk exposure. And when you unwind those positions, you will have your dollar accounts filling up with cash. You're going liquid again, and when doing that, you see a huge influx into the United States dollar. And from that point of view, keeping that reserve currency status, I don't see a shift in that in this point of time, and we are seeing the markets confirming this by the US dollar breaking out of this consolidation that it has had ever since November last year. So I would not be surprised seeing the US dollar higher in this quarter for a decent amount of gains, especially if you start seeing the equity markets turning lower. So what does that mean for you as a trader? Well, obviously, if the general theme for the United States dollar as a basket against other currencies is that it's growing and gaining in value, then you can look for other currencies to short against the US dollar, or you can go long the US dollar against other currency pairs. Next up, EURCAD, which is just a very strict play. You know, I talked about this in not the last, but the week before that update. We were looking for this to break lower. We peaked below, moved back up, and now we got that trade. I'm actually already in this trade from previously, but there is still some move. I wouldn't be surprised if we see some more euro strength before we go lower. So you could have this pullback here that gives you a good entry before going lower, or this pullback is just enough for you going on lower time frames. You could trade this. In some sense, we have already broken out of this one, but you know, whatever fits your trading style. I like this pair lower at this point in time. I'm already in the short trade, although my stops are at break even. I think this still has some room to the downside, especially if we break below this level here. That could be, we could really see EURCAD falling off a cliff. Now, we have seen oil prices pull back a little bit, so that would be the risk to this trade, where we see it moving back upwards as the CAD is taking a hit. But as you know, we have both Euro and Canadian dollar interest rate decisions this week, so this could be a huge mover for this week. Say that we have a interest decision from the euro that brings strength to the euro, while we have an interest rate decision from the Canadian dollar that brings weakness to the Canadian dollar, then obviously you have a huge trade on that difference. And let me just round off by talking a little bit about the looking at risk, because as I said, risk sentiment is a little bit murky. So we need to look at the correlations in risk, because as soon as we're seeing these new trends develop, then that will give you a good idea of where the markets are heading. So if we look at S&P, we have had this huge bull run ever since you know the pandemic crash and moved higher from that. We are obviously seeing signs of this coming to a halt, and with inflation going as high as it is around the world, I can't see equity markets continue making new highs, at least not for a sustained period of time. So I would keep an eye out on the VIX, I would keep an eye out on Bitcoin, and I would keep an eye out on the S&P 500 as good risk indicators, because if we start seeing stocks breaking lower, and the line in the sand is 44.20, the blue line here, if we start seeing risk and stocks breaking below this, that is the shift that I am looking for in the market. That is the signal that I'm looking for in the market, that we are heading into worser times. We are heading into stock market contraction. We are heading into a world economy that is struggling. And I would position my more long-term trading in accordance with that. So keep an eye out for that. If you have any questions, leave them down in the comments, hit a like so we know that these videos are appreciated and we get some discussions going. If you have any questions or anything that you want me to cover in the next market report, you can leave that down in the comments and I will go through that currency pair, that crypto pair, or stock, whatever commodity, you name it. I'll bring that up in the next market report. Until then, stay safe, guys. I hope you have a profitable week and talk to you then.